Hello traders. Today we're going to be looking at SPX, crude oil, silver, and a few dollar pairs. Let's dive in. SPX put in a strong rebound on Friday after Powell's Jackson Hole speech, with the Friday high tagging this upper trend line, and a trend line of which has seen numerous pivots over the years, projected out from these highs here, pivots here, some resistance here, a pivot here, and of course most recently the Friday high. There's also another trend line here that appears to be well observed by the market, projected from these lows here, and a pivot here, some pivots here, some pivots here, some pivot here. And despite the very bullish chart, there is some fragility to this price action structure, where price action is getting increasingly squeezed or wedged in, and this is typically a structure that resolves to the downside. We also see overall momentum slowing, with RSI bearish divergences against the higher highs in the S&P, and we're on close watch for a reversal signal off the upper trend line on the daily time frame this week. Switching over to crude, we've been liking crude on dips last week based on OPEC chatter of production tightening, with an oversupplied market being forecasted for next year, and also last week's report showing very large draws in crude inventories. Price action is looking much more constructive after last week's bullish candle, to follow up on some indecision the week before, and to put in a higher close above the prior two closes. With RSI breaking higher, we think there's a good chance that crude has found a short-term base here off the April, May, and June highs, and looking to recover the 67 handle and eye up a potential breakout into the 70s. Looking at silver, back at the 39 handle, which proved to be a tough level to crack ahead of the 40 level back in July. And there's also a potential slanted head and shoulders structure here that puts us on watch for a daily reversal signal to print off this 39 handle and upper trend line. Moving on to some major FX pairs, starting with dollar yen. It's put in a bearish engulfing on Friday, but is running into very, very strong support, which in my opinion does not qualify as being a legitimate price action signal. Overall, I'm generally unsure about the dollar on the higher time frames, but for the moment, I do like dollar yen on dips due to market expectations already pricing in a healthy amount of cuts and very unlikely to get much more aggressive than it is currently. And because of that, I think it can easily benefit from positioning unwind in short-term US interest rates on positive data releases, for example. Technically, it's found support at 146.60, which is the bottom of this yellow band here after Powell smacked it down, which conveniently filled the imbalance left behind by the strong PPI report on August 14th. So we have confluence support with this trend line here, and a very strong demand imbalance around the 146.60 level. It's recovered above the 147.15 level, which is this orange line here, which has been a very strong support level in recent months, and therefore looking constructive once again above 147.15. Lastly, EURUSD and dollar CAD. These two charts stand out the most in terms of some clear technicals to work with, and in both directions too. In EURUSD, we're seeing a third touch of a trend line here and a third touch of a trend line in dollar CAD as well. So we're looking to trade off the third touch of their respective trend lines, price action strategy that works fairly well across various time frames. And further out, we're also watching for the opposite scenario where we have a breakout candle beyond these trend lines. That's all for today's price action report. If you found this helpful, please like and subscribe. And if you're a serious trader that's interested in joining a private community of traders, check out the link in the video description. Thanks for watching, and good luck trading.